Hello guys, good afternoon. Welcome to another daily market review. Today's date is October 16, and we had a large drop, then a large rally to the upside. Essentially on the 4 hourly, let me just switch to the continuous contract. Essentially the market in the morning session rated the sell side, left equal lows, relatively equal lows, and then tried to rally to the upside. It failed though. We have an S&T divergence right now here because ES actually purged the buy side and left the sell side. So let's take a look at what happened during the New York session on 1 minute time frame. I'm going to annotate the sell side here on the 4 hourly and then drop down to the 1 minute time frame. I did not delete the annotations from today just because I wanted to refer back to them. Okay, so so at New York Open, or during pre-market, essentially the market had, let me go up to the 15-minute first. So we had this equal highs here. Contrast that to the equal lows here. First things first, the market actually built up both buy side and sell side, but then as you guys can see here in this order flow, it's looking bearish because there is displacement to the downside, bearish order block, but on the upside it's kind of shallow, which indicates that the market will seek sell side first, which is what happened. It delivered, or it purged the equal lows on the 50-minute time frame, but instead of rejecting there, it displaced immediately. Thus it ended up going for quote-unquote external liquidity. It could have reversed here, but again, because it displaced, because the 1 minute order flow was not bearish but the weak, went for the external, formed an S&T divergence at the lows with ES here, and then ES went for the buy side. Now let's take a look at it on the 1 minute though. So here we have the equal lows from the 50-minute time frame. So here market during pre-market, it formed a buy model, did not engage with the buy side. It couldn't even get up there, which indicates weakness. It left equal highs here and then displaced before New York Open. Let me annotate that. Displaced before New York Open. Right at the New York Open though, it made a wick to the upside. It also gapped down and open range gap CE, open range gap low. Immediately after open, it took the sell side equal lows essentially. And look how it delivered the equal lows though. The red line is the sell side. This is very important. I really want you guys to understand this. It displaced lower. Okay, that displacement is indicating likelihood of a reversal is not high probability. Okay, so it formed this SIBI inside the open range gap CE. Try to retest that, failed at the 75% of this wick right here, right there, 75% of that wick, which indicates this candle failure is going to cause a breakaway gap here, which is what happened initially. I mean, obviously you do not technically know, but if things are really bearish, it's going to leave it. But the confirmation would be the very next candle. Once it moves away from this up close candle and quote-unquote engulfs it, now we have a bearish order block here. It's confirmed the bearish order block, aka, or at the same time, it confirms the breakaway gap. So here's the order block, immediate rebalance there, displacement to the downside, not displacement. We see some sort of an accumulation which caused a bearish S&T divergence. Then price dumped further, formed inversion fair value gap, emerging fair value gap CE was retested, or not retested but tested, or offered entry, short entry, and then it dropped all the way down to the sell side, cleared that low, formed an SMT divergence on the higher time frame with the ES. It dropped several times here. There's 3 drives, and right at the 10 o'clock open, it cleared the sell side one more time here, and then displacement to the upside. We have double fair value gap here and the breaker block here. Let me annotate the breaker block right there. So the upper fair value gap and the breaker block is at the same level. Market dropped down into the fair value gap and the breaker block immediately after it displaced to the upside. Now we have displacement to the upside. Minor buy side is the SMT divergence essentially, and we have, I need to annotate this because I deleted it, this wick, which is essentially 9:30 a.m. high, time-based liquidity, although it's not a buy side on the 1 minute, it is on the 30-second. So that was the draw on liquidity for this whole session. Here, first SMT, first fair value gap with a breaker caused a displacement. It went up one more time, cleared the minor buy side. I can delete this. Then it retraced quite. It retraced all the way down to the fair value gaps low, the BC low, and then rallied one more time. There's a new breaker block here, could be also used, and essentially it got into the open range gap, stalled at the open range gap CE and the old breakaway gap. Okay. But what's more precise than this breakaway gap is market is actually, or it actually stalled inside this level here. What is this level? This is the 930 candle. This is 930 close and it's low. So it rejected there. As you guys can see, the bodies are respecting. Didn't form an SMT there, but did some damage. And then the 25% of this wick got rejected and it sold off. Formed a breaker, not a breaker, I'm sorry, a bearish order block with this candle engulfing the previous one. Formed a bearish order block. That bearish order block essentially dropped price further. Here's an inversion fair value gap now here, confirmation, and then the candle after, the candle immediately after that retested the inversion fair value gap and price dropped. Displacement here, dropped further all the way down to the old 4-hourly sell side. Okay, this is pretty typical price move with the higher time frame PD arrays. Market usually like digs deeper several times, but at the same time this is also discount, in fact deep discount. It comes all the way down to the deep discount, displaces to the upside. We have this BC here. I'm going to draw this in time. It closed the BC initially, but let me annotate the dealing range EQ. So it dropped here, bumped initially. The BC was failed here, which is pretty normal because this move is actually not changing the state of delivery. It's still bearish because I know this changing the state of delivery, but there is no breaker block, or there is nothing that could hold price in terms of bullish order flow. Thus it comes all the way up here, which is essentially, I mentioned this on the live stream, which is essentially the premium fair value gap in this sell side leg. So it goes up to the premium fair value gap, the CE of it, drops more, and the emerging fair value gap dropped it one more time. It swept the low with that, and then displacement to the upside. This is a rejection essentially, and that rejection caused, let me here, one second, let me see if this is an up close candle or not. This is not. Okay, that displacement essentially caused a breaker here. Price came down to the low of that breaker. It's also in discount, and then rallied one more time, cleared this buy side. Now we have three drives essentially. We have this high, these highs, and this high right here. It retested the open range gap low, essentially rejected with the bodies. I'm not sure if that's an SMT divergence, though I need to check it. Okay, right here somewhere. Alright, that is not an SMT. This is also not an SMT divergence. Okay. So it displays lower, very shallow move though. It kind of looks like a T-WAP. But came all the way down to the discount PD right here, the fair value gap, chopped its way around there, and then rallied to the upside. What this is basically, so this whole price here, okay, I would say this accumulation area, it has one purpose, okay, this whole PA. It has one purpose, because we are observing the 4-hourly distribution, expansion, accumulation, and all of that. This is time distortion, guys. Although it is moving on the 1 minute, it is still tradable, but it is not engaging with the buy side or the sell side, major levels. It just runs on liquidity on the lower time frame, but it's not actually moving. This is accumulation. And the whole purpose of this time distortion is just price is waiting for the 4-hourly open before its move. Okay, so it waited for 2 p.m. Let me show that 2 p.m. is a 4-hourly open. Here's the open. 2 p.m. open. Price manipulates below the equal lows here. Okay, trades outside the open range gap low. We have this inversion fair value gap, or these BISIs here, and then it displaces to the upside. Okay, once it does that, the idea of running above old highs here and 930 high acting as a draw on liquidity is very likely, because this high did not get manipulated at open. Okay, it just formed that high and then dropped. So it displaced higher. Basically this is 4-hourly AMD. It opened, dropped, basically open, accumulation, manipulation, and distribution here. This is 4-hourly candle, open, high, low, and close. How you can trade this: if you have the drawn liquidity, which is 930 high and these equal highs up here, once it displaces the upside, you'll have this fair value gap here. It dropped below. You're longing below open price at 2 o'clock, so you long that. Open range gap high is the first target, 930 high is the first target, second target, and then these highs here is the third and ultimate target. It did not engage with the equal highs, but it took the internal. Nasdaq loves to do this. She loves it. So from that low to the high, 45 points, pretty generous, I would say. And then price rejected there and then dropped down to clear these equal lows. Essentially, it did not clear it, I think. Let me check it out. It didn't clear it just yet, but I think it's what's going on right now. It's probably going to clear these lows here. This PA is the same deal. Market took the buy side, displacement to the lower end, came all the way up to the wick here, which is ugly, but it's what it is. Left another displacement here, retested that displacement, and then dropped below. Right here is the drawn liquidity. This candle doesn't have a manipulation, it basically stalled at that level here, as you guys can see, and then market closed there. The market close today was not eventful, to be honest with you, but overall the morning session and this rally at 2 o'clock was eventful in my opinion, considering the fact that today had no news, and considering the fact that on Monday we had expanded, on Tuesday we had expanded, today we had a large range. In fact, that's not a large range, but the order flow was clean. And the last 10 minutes, let me just read that too, because it's important in my opinion. I know for a fact that some folks likes to trade the last 10 minutes. Here's what I'm seeing on the last 10 minutes. Market actually did some damage to the sell side 3 times here. One sell side delivery, second sell side delivery, then repriced it all the way up to the buy side, which got failed, which got rejected and dropped, basically wicked, and that wick was used as a manipulation later on. The 50% of that wick along with the open range gap high, this is a manipulation, and now price dropped, attacked the sell side throughout the during the after hours in this case. Pretty, I mean, this, you can't trade this because it's in the after hours, but I'm just trying to read it in the perspective of liquidity. So that being said, let's take a look at the higher time frame and try to understand what's going on or what could happen tomorrow. So ideally we get a PO3 here, and this could lead a high resistance from clearing the Monday's high. Okay, ideally, because this could end up being a double purge if the market is really bullish. Okay, that's the ideal scenario for tomorrow. But if it clears the buy side, which it should, because it's equal highs essentially, what I'll be more concerned with is how price reacts to that clearance. Is it just wicking above it and rejecting it, or is it displacing to the upside? If it displaces, I think tomorrow's drawn liquidity will be the inversion fair value gap for Monday 2 a.m. on the 4-hourly time frame. If it doesn't displace, if it rejects it here, I think it's going to be a turtle soup, repricing Nasdaq to equal lows. Either way, I'm expecting the buy side getting taken out. The condition is, if it fails at the buy side, tomorrow's objective will be 20,196. If it displaces, it's going to probably go for the inversion fair value gap, and thereon we'll see how it goes. So for tomorrow, the key levels will be, or the important levels will be, inversion fair value gap on the 4-hourly, but I'm going to give you daily levels. Monday's candle, okay, Monday's low, and Monday's open. Okay, those are the 2 levels. Why? Also Monday's CE. I mean, C is way too high, but the open and the low of Monday's range is very important to me because of the fact that this could actually end up being a bearish order block that could lead Nasdaq to clear these equal lows down here at 19,818. Okay, so keep these 2 levels on the chart. Even today, you can see how it reacted off of that level, those levels. So this is the low of the previous day. Oh, didn't mean to do that. Low of the previous day here, and then this is the open of Monday, also acting very, very nicely on Tuesday. You guys can see that. So keep those 2 levels tomorrow on the chart, and we'll see how it goes from there on. Tomorrow is Thursday. I'm expecting a good price action because it's the only red folder day for the week. I'm probably gonna trade rather heavily, maybe 2 contracts on minis. But yeah, hope you guys find this insightful. Have a great rest of your day, and I'll talk to you tomorrow. See ya.